Get all my buttons clicked. Hi, everyone. Welcome in. Sit tight with us just for a sec while our attendee list stabilizes out. Now we'll go live on Zoom afterwards because I'm getting the same error message. We'll get started here just momentarily. One more time before we get going. All right, it is 1:30. We're going to go ahead and get started here. Hopefully everyone can see my slides okay. Thanks so much for joining. If you are new here, we're just going to go over a couple general housekeeping things on the ELD slide before I hand it off to our guest speaker. But welcome to the All Things ECE with ELD webinar series. This is our third webinar with Civitas Strategies. We've got Jennifer Vale joining us again today, the senior consultant with Civitas. Today's topic is Families First Coronavirus Response Leave Act Leave. FFCRA. So just as a brief reminder, this is being recorded. You all will get a copy of the slides, the recording, the notes, the resources, a certificate, and a questionnaire afterwards. So just kind of remember that at the very end. If you're new here, I'm Melena Miner. I am our membership marketing coordinator on behalf of ELD. We're a shared services nonprofit streamlining all of the administrative day-to-day duties within a childcare system or childcare business, whether that's family childcare homes or centers. This is kind of just a screenshot of different high-level aspects that the core system does do and track for a provider. And as another fun fact, if you were not on our webinar a couple of weeks back, we are essentially giving out core we've received a Daniels fund to and have core available for 50 childcare providers within Colorado for a full year, thanks to the Daniels Fund. So a few of those slots have been taken, but if you have not made the jump to a system, now is a wonderful time to do so. Just a little plug again for our mobile apps. If you haven't downloaded those, feel free to do so via the app stores available. And then our resource platform is free as well for anyone within Colorado. So if you or your colleagues have not taken advantage of all of the kind of one-stop shop, knowledge hub, administrative areas within the resource platform, definitely feel free to do that as well. Before I pass it off to our guest today, if anyone here is representing a center rather than a family child care home attending currently, we do recommend that you watch the recording of our earned income tax credit webinar rather than staying here live today. My colleague Elsa will put that link in the chat for you as well. So if you are here for centers rather than a home, definitely watch that one as well, just so that you're aware of that difference. So awesome. That is it for me. Thanks, Jennifer. Take it away.
Hello, good afternoon. Let me just share my screen here. And how are we doing there? Can we see everything?
Yes, looks perfect.
Perfect. Well, good afternoon. Thank you. I'm Jennifer Vale. I work for Civitas Strategies Early Start, and we are a business that works with childcare businesses across the country to help make your businesses more sustainable and grow. So we've been working with childcare businesses now on the tax credits, the ERTC and the FFCRA, and I'm really happy to be here with you today. So on behalf of Early Learning Ventures, I'd like to welcome you to today's presentation on the Families First Coronavirus Response Act, which is otherwise known as FFCRA. So I'll probably be referring to the tax credit as FFCRA throughout the presentation. Now, our little housekeeping for today is as we go through we're going to go through the entire presentation, and then we're going to answer any questions that you may have at the end of the presentation. So please feel free to enter your questions in the chat, either during the presentation or at the end. And our moderator will read me the questions. Now, your questions will only be viewable by the moderator, so feel free to ask whatever you would like. And if we happen to have a situation where there's a question that I am unable to answer, I will have you put your email and your name in the chat, and I will be back in touch with you after I can confer with some of my coworkers and get some answers for you. So happy to do that. Okay, so before we begin, I'd just like to read the disclaimer, and this information contained here has been prepared by Civitas Strategies Early Start and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies Early Start team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information is not intended to create, and receipt does not constitute an attorney-client or any other advisory relationship, and reproduction of this information is expressly prohibited. All right, so today we're going to discuss FFCRA. We're going to discuss what it is, why it was created, and how you're going to determine if your business is eligible. And once I've shown you how to determine your business's eligibility, we'll explain how to calculate the credit and how to file. So I'd like everybody to know that this credit is very attractive to many childcare businesses, as it can apply to both centers and home providers. And unlike the ERTC credit, if you're familiar with that, you can actually receive credits for the payroll for the owner and any family members, as well as your W-2 employees. So that's another advantage that FFCRA has. All right, so why does it exist? Well, when the pandemic struck, many small businesses had to provide paid time off and paid sick leave due to COVID-19 related illness or quarantine. And the FFCRA was created to help businesses recover payroll that they extended to employees during that difficult time. Now, it will provide, the FFCRA will provide funds in the form of payroll tax credits to help alleviate the economic impact of needing to provide this leave. So what that means is that you actually would be receiving credits, checks, quarterly checks from the IRS. So it does come back to you, this credit, in the form of checks from the IRS. So the FFCRA allows businesses to claim the credit for both ownership and up to 500 employees. And if you do not have W-2 employees and you work by business for yourself, you can still qualify. So you don't have to have W-2 employees to qualify. Now, the FFCRA covers the time period of March 15th, 2020 through September 30th, 2021. And I do have to say that although many businesses had time periods where they provided paid leave after the 30th of September 2021, unfortunately, any paid leave after September 30th, 2021 would not qualify. So the next slide, we're going to explain how you determine your eligibility. And I do want to let you know that businesses have through 2024 to amend their past taxes to apply for this credit. So it is not too late to apply. All right, so what is the benefit? What are the credits? There are two different types of credits that are available. And I'm going to say some names that I don't expect you to remember, and you actually probably will not need to refer to them again. But the first type of credit falls under the Emergency Paid Sick Leave Act, which is EPSLA, in case you see that. Now, this credit covers up to 80 hours of sick leave that you paid employees or yourself under the following circumstances. Now, if an employee or yourself had COVID, or if you had to quarantine due to COVID, you can receive 100% of the regular rate of pay for up to 80 hours. And there is a cap on the amount of credit that you can claim, which is $511 per day per employee, which means a maximum of $5,110 credit in whole. So what you would be looking at are the rate of pay times the amount of hours that an employee was out due to having COVID or having to quarantine. Now, if an employee was out due to having to care for an immediate family member or a child whose daycare or school was closed or there was remote schooling, then you would be eligible to earn 2/3 pay up to 80 hours. And what that would mean is that the max for that is $200 a day with a max credit then for that employee of $2,000. Now, you may be familiar with the second type of FFCRA, which is the Emergency Family and Medical Leave Expansion Act, which is EFMLEA. And under this act, your employees were eligible to take up to 12 weeks off to care for a child whose school was closed, including remote learning. And in this particular instance, you can also basically, you can get a credit back of 2/3 pay up to $200 a day with a maximum of $2,000 per employee. So we're not necessarily looking at the amount of hours as much as we know what the maximum is per day, and that these days can be intermittent over the course of 10 weeks, but the same cap does apply. Now, so we have that $2,000 a day, $2,000 in total cap. One of the things that's interesting about FFCRA is that there's actually 2 time periods in which you can earn credit, that you can get these payroll rebates. The first is March 15th, 2020 through March 31st, 2021. So keep that in mind. In that time period, you can claim up to 80 hours per employee. Again, these are wages that you paid because an employee was out either having COVID, quarantine COVID, caring for an immediate family member with COVID, or staying home with a child. So you can claim up to 80 hours between March 15th, 2020, March 31st, 2021. As of April 1st, 2021, it resets, and then you can claim another 80 hours between April 1st, 2021 and September 30th, 2021. So it's very interesting. We have from March to March, we have 80 hours we can claim, and then it resets and we can claim another 80 hours. So if you had an employee who had 2 weeks of sick pay, they had COVID and they had to quarantine at some point, and let's say they had 80 hours between March 15th of 2020 and March 31st of 2021, you'd get to get a tax credit back for all 80 hours. And then if they had the unfortunate circumstances of being ill, caring for a child, having to quarantine between April 1st, 2021 and September 30th, 2021, you get to claim those 80 hours. So that is nice, and that there is this ability to, you have these 2 separate time periods that you can go ahead and claim payroll for. So that definitely is a bonus there. Now, how do you claim this benefit? How do you calculate this benefit? So now, once you've determined that your employees and you have qualified, so what that means is, right, we figured out that we had days that fell under those 2 circumstances. What we would then do is you're going to want to count the number of hours that your employee was out and determine, are they up to the full pay? Are they at the 2/3 pay? Then what you'll do there is remember that the cap is $500 a day per employee, or $5,110 for up to 80 hours. If they're at the 2/3 rate of pay, $200 a day, $2,000 per maximum for that employee. Now, what I'm going to recommend is that, as you can see here, document the rate and time. What's really important is that you make sure that you are doing the calculations properly and that you have a record of your calculations, because this could be audited. This is a tax situation. You're going to be asking for tax credits back. So my recommendation is to either pull your payroll report, and you may be able, through your payroll report, to identify the time that your employees were out, calculate those hours. However, another way that you can do it, if those are documents that do not give you the relevant information that you need, I would recommend that you create either a simple spreadsheet or just make some columns on a piece of paper. And what you would want to do for every employee that would be eligible, first column, put the employee's name. The second column, put their rate of pay. What is their hourly rate of pay? The next column, make a note of what days were they absent, include the years, because we did see that the 80 hours resets. So include the years. Next column, then, that time period, those times that they were absent, how many hours does that equal? And we would put that there. What you would next do, right, is you're going to take the hourly rate and you're going to multiply it by the number of hours, come up with a number, and then you'll decide which of the two circumstances does this situation fall under. Did the employee have COVID or quarantine, or did the employee stay home with an immediate family member to care for them with COVID, or be home with the children due to homeschooling? And that's how you would calculate your credit. So if you think of a spreadsheet like that, I'm going to give an example. So let's say I have my employee's name is Jane, and Jane makes $15 an hour. Well, when was Jane out? Oh, look, she was out. Unfortunately, she had COVID and had to quarantine for 2 weeks in June of 2020. And those 2 weeks did amount to 80 hours. Fantastic. Well, $15 an hour times, having worked the 80 hours, basically she would then have her, the total would be $1,200. So $1,200, we're looking at that. Now, what circumstances did Jane fall under? Well, in this instance, Jane had COVID herself, unfortunately. Therefore, the credit that you will be claiming for that employee would be the full $1,200. Now, let's take Joe. So Joe, same hourly rate, $15 an hour, was also out for 2 weeks during one of the time periods. That's 80 hours. You get to claim the maximum 80 hours. But Joe was home taking care of a child who was being homeschooled. So in that instance, we can only take 2/3 of that $1,200. So your credit for Joe would be $804 versus the $1,200 that you had for Jane. And that's because of those two different sets of circumstances. So again, you may have all of this information at your fingertips through a payroll report, or you may need to do a little bit of calculation yourself. The spreadsheet works really, really well. It covers two bases. It allows you to do the calculations, and it provides documentation should you ever be asked for it. After that, once you've done the calculations, these are filed quarterly. So if you have W-2 employees, you would be filling out per quarter the Form 941X. Now, if you're a sole proprietor, you're going to use the 1040X, which is an amendment of your taxes. And if you have a 1099 employee, they would be filing themselves, and they would be using the 1040X as well, taking the 1040, their Schedule C from the 1040, that it will be their responsibility as a 1099 employee. So once that happens, once you fill out the forms, they get mailed to the IRS. And then right now, looks like the turn time is about 6 to 9 months, unfortunately, to receive your money back. So that is basically where we're looking at with the FFCRA. You do want to just remember that these are tax credits. If you happen to have outstanding taxes with the IRS, they will come off of your outstanding balance instead of receiving a credit. But that is, I guess, to be expected. So that basically is our information on FFCRA. And I'm hoping that we have a lot of questions and that we can kind of go over some of the details. So, and again, if I don't have an answer for you today, I can get an answer from the experts at the company that I work with. So please add your email and your question in the chat if I do say that we need to get some further clarification. And after we review our questions, we'll see in the next slide where you can register for free business coaching through Early Learning Ventures. So, Alana, do we have any questions?
Thanks, Jennifer. Let's take a look here. Feel free to type any other questions out if those are still kind of brainstorming here. Let me take a look over on our Facebook as well. No questions on Facebook. Any questions in Zoom? I'm not seeing any questions in Zoom either. Maybe you did a great job. That's what that means.
either that or all of you folks are confused. So no, I do hope if anybody has any questions, please do not hesitate. So I'm just going to go back and just quick highlights before we jump to that last slide. Sure. and you can see where the coaching is. So again, these are federal tax credits. They're based on the amount of hours that you or your employees were out due to those COVID-related situations. And so the rewards can be quite fruitful. It is basically you being reimbursed for the times that you paid your employees during very, very difficult place in your business, right? So from that period of March 15th, 2020 through September 30th of 2021. So again, tax credits, making the calculations not difficult. I really, really would suggest that you go into your payroll records, go into wherever you keep your payroll, where you would be aware of what dates your employees were out due to these types of circumstances, and make that spreadsheet, make that list, even if it's on a piece of paper. Look for those days. Remember that everything resets. So you have that 80 hours between the 15th of March, 2020 until March 31st, 2021. There's up to 80 hours of pay per employee or yourself that you can claim. And then it resets, and then you'll have that second series of 80 hours that you can claim. So as you can see, if we're talking about credits per employee, this certainly can be a very lucrative. It definitely is worth filing. It's worth looking into. And if you're a family home provider, please consider doing this for yourself. If you had the unfortunate situation of either being ill, quarantining, caring for someone, or if you had a child home from school and you were doing homeschooling. So I really encourage everyone to register for business coaching if any of this does seem a little confusing. As you can see here, you can register for free business coaching at www.elvc-cses.com. So again, that's www.elvc-cses.com. So I thank you. Any questions, Moana? Anything else happened to come over?
One more came through. You may have answered this, but if the employee is not working at the business anymore, are we still eligible for the credit?
Absolutely. Yes, it is based on what happened during that time period. So you do not have to have retained the employee in order to receive that credit. You'll just be going back into your payroll and documenting the days in which they were absent.
Perfect. All right. Elsa has included the recording to the ERTC version of the webinar earlier, if anyone still needs access to that. And then another question, what about people who collected unemployment?
Okay, so unfortunately, if they collected unemployment under those circumstances, you were not paying them. And this is based on your payroll. So these are only the circumstances in which you paid an employee that was out due to those COVID-related circumstances. So if an employee was receiving unemployment, you would not have been paying them. So no, that would not be included.
We have another question.
Hi, I have a question.
Go ahead, Roy.
I didn't do that. I have a payroll company who did that. And in our case, when we had a couple of incidents that the teacher had COVID, and because we are a mobile preschool, and at that time we only had one mobile, so we had to shut down the whole business because she didn't show up, But I guess you answered the question whether during that time these things happened. So my payroll company filed for us to get the credit. And you said it's going to take 6 to 9 months, because I was wondering, because she did that like about 3 months ago.
Yeah. Yeah, so you have to figure that across the United States, business owners were eligible for this. And that's why we have that time lag, unfortunately, with the IRS. Some folks get it a little sooner than 6 months, but on average, we've seen six to 9 months. So I'm glad to hear that your payroll company was able to file for you with that under the circumstances. I'm so sorry to hear the circumstances that took place, but yeah, hang in there, because you will receive those checks per quarter.
So my question is, this is a credit. So when we want to do our taxes, we're a nonprofit. Do we declare that as an income or as
No, you do not. You do not declare that as income, because that is just a credit back from the payroll that the payroll taxes that you've paid already. Okay. And it is not considered to be income or revenue, I should say. So you will not have to claim that.
Okay. Thank you so much. I
That's right.
learned a lot. Okay.
All right. And another question, what if an employee received payroll protection pay? Could we just go to that?
So, yep, very, very important is just as with the ERTC, is that you cannot claim any payroll that was covered by PPP or any payroll that you used to claim the ERTC credit. I'm so glad that that question did come up. So it is important to know that we would not be including those wages there. So if you happen to have that payroll covered during a time that an employee was out due to one of those circumstances, you would not be claiming the FFCRA credit for that time period.
All right. I think we're all caught up on questions now. If anything else has come up, feel free to go ahead and type that in. We'll give you just a few minutes here to finalize anything. Anything else, Jennifer, you want to cover before we?
I would like to let everybody know that if you're interested in hearing this presentation in Spanish, it is going to be conducted 1 week from today on October 28th, also at 1:30. So if you'd like to hear that. And Milana, where will this be posted? So if anyone would like to refer back.
They will be getting the recording. If you've registered for today's webinar, you'll get the recording through an email. It's also going to be on our Facebook page within our videos, on our website, under our webinars page, and YouTube as well. So several different platforms for you.
Oh, fantastic. And again, business coaching, www.elvc-cses.com. What does that business coaching entail is that it's actually a 30-minute phone call that's devoted entirely to you and would be your questions on FFCRA or ERTC. So if you attended one of the ERTC webinars and now have thought of some questions, register for business coaching. It will allow us to have a free, it is provided by Early Learning Ventures. We'll have a free half-an-hour conversation. Either myself or my coworker, Matt, will work with you to work through any questions that you happen to have. We are available if someone wanted to submit some of the information that they've calculated to see if we feel that they are doing the calculations properly. The other thing about FFCRA is it's simple. It's not difficult. And a lot of times coaching can occur just via email, where we might have an exchange rather than set you up with a phone appointment. We may be able to ask some questions and have a little bit of an email exchange and take care of that for you so that you are not tied down with a phone call and can send and receive emails at your convenience. So FFCRA is a topic that is very easily coachable through email.
Awesome. And one more last minute question. Do you do nonprofit 900, easy, or 990 tax forms?
I'm going to need a name and email address. I just want to run that by Gary.
Absolutely.
So if no one minds, if I could just get that information, and then we will.
I will follow up. Yes.
Yeah.
I'll connect you too.
Yeah,
No
I
worries.
apologize. We don't have that information, but let's go to the experts and make sure.
Absolutely. All right. I think that's about it. Just as a reminder, the recording, the resources, you'll get the certificate and have a questionnaire as well. Will all be sent to you shortly afterwards. Thank you all so much. That is it for us. We'll give you a little bit of time back in your day on a Friday, and have a great weekend.
Thank you, everybody. I appreciate you
everyone.
joining us today.
Thanks, Jennifer.
You're welcome.